Imagine paradise turning into a financial graveyard. That's Florida in 2025. The dream of sun-soaked retirement condos and booming suburban homes has twisted into a nightmare of collapsing prices, suffocating insurance bills, and streets lined with desperate for-sale signs. In some cities, inventories have exploded 200 to 300%, while homeowners slash prices by $50,000 to $100,000 just to escape crushing costs. Insurance premiums that once averaged $2,500 now devour $8,000 to $12,000 a year, wiping out savings and equity. What was once the hottest housing market in America is now ground zero for devastation. Florida's collapse isn't coming. It's already here, and it's brutal. Number 10. Punta Gorda. Punta Gorda, tucked along Florida's Gulf Coast, is experiencing a housing shock that feels like a financial hurricane without a drop of rain. Once hailed as a retirement paradise, the city's affordability narrative has flipped upside down. Median home prices here shot up nearly 65% between 2020 and 2022, peaking close to $420,000 for a single-family home. But the frenzy is now turning into a fire sale. By mid-2025, inventory ballooned by nearly 240% compared to 2 years ago, with price cuts slashing values by 20 to 30% across entire neighborhoods. Some listings are now begging for offers under $300,000, a stunning reversal in a market where bidding wars once pushed prices beyond asking. The driving forces are a toxic cocktail: surging insurance premiums, spiraling HOA fees, and a flood of new construction colliding with weaker demand. Many residents face insurance renewals of $8,000 to $10,000 per year, making homes essentially unsellable unless the seller takes a brutal haircut on price. Retirees who once fled cold northern winters for Punta Gorda are now fleeing the city itself, cashing out before their nest eggs are drained by rising costs. Even cash buyers aren't immune. Investors who bought properties to flip or rent are seeing rents stagnate while carrying costs skyrocket. Nearly 38% of active listings in Punta Gorda have recorded price reductions, and distressed sales are quietly creeping back in. The mood on the ground feels eerily similar to 2008, when over-leveraged buyers and oversupply turned paradise into panic. Realtors whisper about deals falling through daily, with appraisals coming in $50,000 to $80,000 below, forcing desperate renegotiations. The devastation is clear. A city built on the promise of steady sunshine and secure retirement is now a cautionary tale. Punta Gorda isn't just cooling. It's unraveling into one of Florida's most shocking housing busts of 2025. Number 9. Jacksonville. Jacksonville, Florida's largest city by land area, is now facing a housing downturn that looks less like a correction and more like a slow-motion collapse. The city enjoyed a wild boom between 2020 and 2022, with median home prices skyrocketing from $230,000 to nearly $360,000, fueled by remote workers and investors flooding into the market. But as of 2025, the tide has turned. Inventory has more than tripled since 2022, with active listings surpassing 10,000 homes, the highest in over a decade. Price cuts are everywhere. About 36% of homes on the market have reduced asking prices, often by $20,000 to $50,000, just to lure in reluctant buyers. Insurance costs are adding fuel to the fire. Homeowners who once paid $2,500 annually are now staring at premiums closer to $7,000 to $9,000, especially in flood-prone zones near the St. Johns River. HOAs, once tolerable, are also hitting families with monthly dues north of $400, making affordable living a cruel joke. Meanwhile, mortgage rates hovering around 7% have crushed affordability. A buyer who could afford a $350,000 home 3 years ago now struggles to qualify for anything above $250,000, slamming demand into the ground. Investors are pulling out, leaving neighborhoods with growing clusters of unsold or abandoned properties. Rental markets are softening too. Rents that hit $1,900 for a 2-bedroom in 2022 are stagnating, forcing landlords to slash rates or offer concessions. This collapse of rental demand is squeezing the very investors who once drove prices into the stratosphere. The shock in Jacksonville is not just financial, it's psychological. Locals who believed their city was recession-proof are waking up to see Zillow estimates plummet and for-sale signs multiplying like weeds. The once booming Florida dream in Jacksonville is unraveling into a nightmare of collapsing values and financial strain. Number 8. Palm Bay. Palm Bay, often overshadowed by its more famous neighbors on Florida's Space Coast, has become a hidden epicenter of the housing crisis. In 2021, Palm Bay was marketed as one of the last affordable Florida havens, with median home prices around $210,000. By late 2022, fueled by migration and speculative investors, those prices ballooned to nearly $330,000, a 57% surge in just 2 years. But the crash has now arrived. By mid-2025, listings are sitting unsold for months, and price reductions slash homes back toward the $250,000 to $270,000 range. Nearly 35% of all active listings in Palm Bay have reported price cuts, one of the highest rates in the state. Sellers are panicking as carrying costs spiral out of control. Home insurance premiums that averaged $2,000 annually a few years ago now often exceed $6,500, with some coastal homeowners paying $9,000 or more. Add in property taxes on inflated pandemic-era assessments, often above $4,000 per year, and Palm Bay has turned from a budget-friendly option into a financial trap. The oversupply is made worse by aggressive new construction. Developers who rushed to cash in during the boom are now stuck with subdivisions of unsold homes. Entire blocks of brand-new properties sit empty, their glossy listings piling up on Zillow. Meanwhile, demand has evaporated as buyers are priced out by mortgage rates. A typical family earning $60,000 a year simply can't touch a $300,000 home with today's financing costs. Investors who bought multiple properties to rent out are also being squeezed. Average rents have stagnated around $1,700 a month, while maintenance and insurance eat away at profits. Some landlords are quietly selling at losses to escape. Palm Bay, once a rising star of Florida real estate, is now a glaring example of how quickly paradise can turn into devastation. Number 7. Fort Myers. Fort Myers, part of the same metro as Cape Coral, is living through what analysts are calling the worst housing disaster in the nation. The city's median home price soared to $420,000 in 2022, up nearly 70% from 2019, making it one of America's hottest pandemic boomtowns. But in 2025, the bubble has burst. Prices have already fallen by 15 to 20%, dragging the median back toward the $340,000 range, with further declines likely as inventory continues to climb. Inventory in Fort Myers has exploded by more than 250% since 2021, leaving thousands of homes languishing on the market. Over 40% of listings have seen price reductions, with some sellers slashing asking prices by $100,000 or more in desperation. Even luxury homes are being gutted, with million-dollar listings dropping into the $700,000. For ordinary homeowners, it's a financial gut punch, especially those who bought at the peak with little equity cushion. Insurance costs are particularly brutal in Fort Myers. After Hurricane Ian and subsequent storms, premiums for many households surged into the $10,000 to $12,000 per year range, effectively doubling or tripling housing costs overnight. HOA fees in many communities now exceed $500 a month, pushing retirees and fixed-income families into crisis mode. Add in rising property taxes, and the affordability picture collapses entirely. The fallout is devastating for the broader economy. Investors are abandoning the market, tourism-driven job growth has slowed, and foreclosures are beginning to creep upward. Anecdotes of homes selling for $80,000 below their 2022 purchase price are becoming more common. The city once promoted as Paradise on the Gulf is now the poster child for Florida's silent housing crash. Fort Myers isn't just cooling, it's in freefall, and it's dragging thousands of families' financial futures down with it. Number 6. Tampa. Tampa, once considered one of Florida's hottest and most bulletproof real estate markets is now unraveling at a pace few predicted. Between 2020 and 2022, median home prices in Tampa surged nearly 65%, jumping from around $260,000 to $430,000. This dizzying growth was fueled by migration, investor buying, and the short-term rental craze. But by 2025, the tide has turned. Home prices have slipped 6 to 8% year over year, with the median dipping below $400,000, and the cracks are widening. Inventory has exploded by over 200% since 2021, leaving thousands of homes sitting unsold. Nearly 37% of listings in Tampa have recorded price cuts, many by $25,000 to $75,000, as sellers grow desperate. The affordability crisis is striking at the heart of the market. A household earning the median local income of about $70,000 now faces monthly mortgage payments over $2,800 on a modest three-bedroom, more than 50% of take-home pay when insurance and taxes are included. Insurance premiums average $6,000 to $9,000 annually, with flood zones pushing bills higher. HOA fees can add another $400 to $600 per month, pushing many families beyond their breaking point. Investors are also retreating. Short-term rental profits are collapsing as oversupply floods Airbnb and VRBO platforms, leaving investors unable to cover rising costs. Rental concessions are growing, with landlords offering 1 to 2 months of free rent just to fill vacancies. The psychology of the market has shifted sharply. What was once buy now or be priced out forever has become, wait, it'll be cheaper next month. Realtors whisper of appraisals coming in $50,000 below asking, forcing deals into chaos. Tampa is no longer a red-hot boomtown. It's a flashing red warning sign of Florida's broader housing meltdown. Number 5. West Palm Beach. West Palm Beach has always been a symbol of Florida's coastal luxury. But beneath the palm-lined streets and waterfront condos, the housing market is buckling. From 2020 to 2022, median home prices soared nearly 70%, peaking around $600,000. By 2025, cracks are spreading fast. Inventory has surged more than 180% in 2 years, and nearly 40% of current listings have seen price cuts. Many condos that once fetched $700,000 are now being relisted at $550,000 or lower, a shocking reversal in a city where demand once seemed insatiable. The financial pain is magnified by skyrocketing insurance. Waterfront condo owners are reporting annual premiums of $10,000 to $15,000, wiping out affordability for retirees and snowbirds who once anchored the market. HOA fees in high-rise buildings, already steep, now exceed $1,000 per month in many cases due to rising maintenance and reserve fund requirements. For a couple living on Social Security or pensions, that combination is devastating. The rental market offers little relief. Luxury apartments that rented for $3,000 per month in 2022 are now struggling to find tenants even with incentives. Investors who bought during the frenzy are hemorrhaging cash, selling at losses, or simply walking away. Adding to the crisis, appraisers are consistently valuing homes 10 to 15% below seller expectations, leading to collapsed contracts and mounting frustration. The once glittering image of West Palm Beach real estate is tarnished, and the local economy is feeling the ripple effects. Retail vacancies are creeping up, and service jobs tied to real estate are drying. What was once a showcase of coastal prosperity is morphing into a cautionary tale, proving that not even Florida's most glamorous zip codes are immune from devastation. Number 4. St. Petersburg. St. Petersburg, a jewel of the Gulf Coast known for its artsy vibe and waterfront lifestyle, is facing a housing downturn that's shocking longtime residents. The city's median home price, which hit nearly $420,000 in 2022, is now slipping toward the $360,000 to $370,000 range, representing a 12 to 15% drop. Inventory has ballooned by more than 210% since the peak, and almost 35% of listings show price reductions, with some slashed by $50,000 to $100,000 just to get a showing. The problem is affordability. With local household incomes averaging around $65,000, buying even a modest home means taking on monthly payments well over $2,500, before adding property taxes and insurance. Insurance premiums are crushing budgets, averaging $7,000 to $9,000 annually, with waterfront homes paying even more. HOA fees, once manageable, are climbing above $400 per month, eroding what little affordability remained. The investor pullback is also brutal. Many who bought condos during the boom to rent on Airbnb are finding themselves drowning. Occupancy rates are down, competition is up, and monthly cash flow has turned negative. Some investors are dumping properties at losses of 10 to 20% below peak purchase prices. Meanwhile, locals are increasingly priced out. Rent for a two-bedroom apartment averages around $2,200, up nearly 40% from 2019, yet wages haven't kept pace. As buyers vanish, St. Pete's once unstoppable growth narrative is reversing. Realtors describe entire neighborhoods where "for sale" signs linger for 6 months or more, unheard of just a few years ago. St. Petersburg's downfall is stunning because it was marketed as a forever growth city. Instead, it now symbolizes how quickly the Florida boom can unravel. Paradise has turned precarious, and residents are left watching their home equity evaporate like morning mist over the Gulf. Number 3. Northport. Northport, once a darling of Florida's affordable housing story, is now crashing under the weight of its own boom. Between 2019 and 2022, the city's median home price nearly doubled, leaping from $220,000 to over $420,000. By 2025, that frenzy has collapsed. Median prices have already dropped back toward $340,000, with many homes sitting on the market for months. Inventory has exploded by more than 230% in just 2 years, and nearly 39% of active listings have seen price reductions, many slashed by $50,000 or more to catch the shrinking pool of buyers. Insurance is the iceberg sinking this ship. Premiums that once averaged $2,500 annually now routinely exceed $8,000 to $10,000, leaving homes functionally unaffordable even after steep price cuts. Retirees, once the backbone of demand, are fleeing, unable to stomach the combined cost of insurance, HOA fees, and property taxes, which often top $5,000 a year. The new construction frenzy is now making things worse. Builders who flooded the market with subdivisions in 2021 to 2022 are drowning in unsold inventory. Dozens of brand-new homes sit empty, while developers slash prices by 20 to 25% below last year's sales to keep cash flow alive. For owners who bought at peak, the equity wipeout is brutal. Some are already underwater by $60,000 to $100,000. Rents are no safe haven either. A 3-bedroom that rented for $2,200 in 2022 now struggles to fetch $1,900, while landlord expenses keep climbing. Investors who piled in during the pandemic are cashing out at losses or abandoning the market entirely. Northport is no longer the affordable paradise it was advertised to be. Instead, it has become one of Florida's most shocking busts, a city where "for sale" signs stretch street after street like tombstones of a broken boom. Number 2. Lakeland. Lakeland, a city that exploded during the pandemic as an affordable alternative between Tampa and Orlando, is now ground zero for devastation. In 2019, you could still snag a median-priced home for around $185,000. By 2022, the median had rocketed to nearly $325,000, a staggering 75% increase. But by 2025, the story has flipped. Median prices are falling back toward the $260,000 to $270,000 range, with more pain ahead. Inventory in Lakeland has surged more than 280% since 2021, swamping the market with homes that simply won't move. About 33% of all active listings have price reductions, often by $20,000 to $40,000, as sellers watch showings evaporate. Even with cuts, buyers remain scarce, crushed by affordability. With local incomes averaging just $58,000 per household, A $300,000 home with today's 7% mortgage rates translates into monthly payments over $2,300, not including the additional $5,000 to $6,000 annual insurance premiums that now plague Central Florida. HOA fees, once negligible in Lakeland, are spiking above $350 a month in many newer subdivisions, adding insult to injury. Property taxes, recalculated on peak pandemic values, leave many homeowners stuck with $4,000 plus yearly bills. For middle-class families, it's financial suffocation. Investors who rushed in during 2021 to scoop up rental properties are also bailing out. Rents that climbed to $1,800 for a two-bedroom have plateaued, forcing landlords to offer concessions or swallow losses as insurance and maintenance bills balloon. Lakeland's fall is particularly shocking because it was never meant to be a luxury market. It was marketed as Florida's budget-friendly city. Instead, it has become a poster child for how quickly affordability collapses under inflation, high interest rates, and insurance chaos. The American dream in Lakeland has turned into a debt-laden nightmare. Number 1. Cape Coral. Cape Coral is the epicenter of Florida's housing devastation, what analysts are bluntly calling the worst housing market in America. From 2019 to 2022, the city's median home price nearly doubled, climbing from $240,000 to over $450,000. By mid-2025, that same median has tumbled into the $380,000 range, with some neighborhoods seeing drops closer to 20 to 25%. Inventory has soared by more than 300% since 2021, leaving thousands of listings languishing unsold. Nearly 40% of homes on the market have had price cuts, with many slashed by $75,000 to $100,000. The pain doesn't stop at falling prices. Insurance premiums here are among the most punishing in the nation, averaging $9,000 to $12,000 annually, with waterfront properties paying even more. After Hurricane Ian's destruction, insurers either abandoned the region or tripled rates, turning homeownership into a money pit. HOA fees add another $400 to $600 monthly, while property taxes often top $6,000 a year. Numbers that obliterate affordability even as sale prices drop. The investor exodus is accelerating the collapse. Flippers who bought in 2021 are now unloading at losses, with many homes selling $50,000 to $80,000 below their purchase price. Rental demand, once buoyed by population growth, is softening too, with average rents stuck around $2,000 a month despite rising costs. For ordinary homeowners, the devastation is personal. Families who stretched to buy at the peak are now underwater, their equity erased. Retirees who came for sunshine are leaving after being hit with $10,000 insurance bills. Realtors openly call the market frozen, with appraisals coming in far below, asking collapsing deals at the closing table. Cape Coral is no longer just cooling, it is unraveling into a full-blown housing disaster. The city once marketed as paradise on the Gulf is now a grim warning of Florida's silent real estate crash.